Hello. Hello, everyone, and welcome to today's plenary session for Inclusive Fintech 50, IF50. We're going to be talking about driving innovation in an era of uncertainty. My name is Wisha Gosla. I am the Africa CEO for Jumo, and I am also one of the judges for Inclusive Fintech 50. It's my second year running as a judge, and I have to say that I have been incredibly inspired to see a stellar cohort of 50 inclusive fintechs this year, all of whom are innovating really holistically to address customer pain points at such a difficult and uncertain time. Before we begin, I'd like to quickly go through some housekeeping, starting with, and then I will also introduce our esteemed panelists. So we encourage questions. Please post your questions to the chat box on the right of the video. There will be a Q&A after the panel discussion with the fintechs that are on the panel. Also, as part of housekeeping, please note that this session is going to be recorded. We will make it available on the Financial Inclusion Week platform, as well as on the CFI YouTube channel. Now, without further ado, I would like to introduce our panelists, our esteemed panelists. First up, we have Beth Hurwitz. Now, Beth is the Senior Vice President for Social Impact at Visa, where she is responsible for delivering on the company's mission, social impact vision, to be a force for good that advances equitable, inclusive, and sustainable economic growth for everyone, everywhere. Now, Visa is one of the founding sponsors of IF50 and has been a sponsor for the past 3 years. Beth and her global team help to realize Visa's mission through empowering small and micro businesses, ensuring equitable access to financial and digital ecosystems. And in that way, they are strengthening the communities in which we all live and work. Next, we have Halima Iqbal. Halima is the CEO and founder at Oran. She is a former investment banker and a consultant with over 8 years of experience. She moved back to Pakistan in 2017 after spending a decade in North America with the view to drive inclusive finance and make it simple for the underserved millions. Oran is actually Pakistan's first women-led women-first fintech startup with a flagship product that offers women the opportunity to save and borrow from beyond their immediate social and geographical network. So welcome, Halima. Then we have Sharian. Sharian is the co-founder and CEO of Sanang Insurance. Sanang is known for its on-demand subscription-based insurance platform, and it plays the role of a broker between large insurance providers and those who need micro coverage. Through its technology, Sanang enables large insurance companies to serve non-salaried, low-income workers directly. Welcome, Sharian. Then we also have Krishna Thacker. Krishna leads MetLife Foundation's philanthropic work in the Asia region with the focus on building financial health for low to moderate income communities. He has successfully led and executed MetLife's first 5-year financial health strategy in the region, deploying more than $70 million in grants and impact investing programs that have reached more than 9 million low and moderate income people. MetLife Foundation is also one of the founding sponsors of IF50 and has been a sponsor for the past 3 years. So welcome. Lastly, but not least, we have Michael Wilkerson. Michael is the CEO and founder of Tugende, and he has lived in Uganda for more than 10 years. He began his career as a journalist, starting with internships at Uganda's The Daily Monitor and Independent, before founding Tugende. Now, Tugende is tackling the issue of the credit gap for small businesses here in Africa by enabling informal entrepreneurs to firstly own income-generating assets and build a verifiable digital credit profile. And Tugende's platform works based on these entrepreneurs' real-world earnings and allows them access to future growth opportunities on the platform. So that's who we have today, a fantastic panel. Before we get into the panel, though, we will have a few opening remarks from Beth Hurwitz at Visa. So Beth, over to you.
Thank you so much, Bushley. I am so honored and excited to be here and part of this Inclusive FinTech 50 program. Visa believes that digital equity is a key component of rebuilding for a more inclusive world, and fintechs are a major part of that solution. But before I discuss Inclusive Fintech 50 and we hear from some of our amazing winners, I wanted to spend just a bit of time discussing the digital financial ecosystem, what we're seeing at Visa, and why what we're doing here together just really matters. The pandemic accelerated about 3 years of digital advancement into one. And this pace of digitization is just not going away. Our numbers at Visa show a significant uptick in digital commerce, and that's just not going to revert after the pandemic. This means that businesses that are digitally equipped have been much more resilient, and in some cases have even thrived during the global recession. Being able to participate in the digital economy and society is increasingly essential for everyone's welfare. It used to be from a financial perspective that if you had a financial account somewhere, that made you part of the formal economy and that was enough. But that's just no longer the case. In order to really fuel inclusive growth, people need to fully participate in the digital formal economy. And to participate, you need more than access to technology and tools. You need to have skills, you need to have trust. And that's why we at Visa are focusing on improving digital equity and inclusion to ensure everyone can take advantage of this technical innovation so that we can recover, build resilience, and thrive in a digital world. I want to briefly highlight just a few key areas where Visa is supporting this road to digital equity and equality. In June 2020, we made a commitment to digitally enable 50 million small and micro businesses worldwide to help get local economies and communities back to business, since these SMBs are the backbone of the global economy. And we're doing this by leveraging the power and scale of our network, our resources, our expertise, and infrastructure to connect these small and micro businesses with new digital growth opportunities. To date, we have helped to digitally enable just under 20 million small and micro businesses worldwide. Also, Visa Foundation established the Equitable Access Initiative, which is a $200 million 5-year program that is providing grants and impact investments to support small and micro businesses and women's economic advancement. And to date, Visa's foundation has allocated over $50 million in capital in support of inclusive SMBs around the world as part of this initiative. And as my last example, Visa is also providing financial and digital educational resources for both individuals and small and micro businesses. Earlier this year, we announced the expansion of Practical Business Skills, which is our global digital platform delivering educational resources to help SMB owners make confident, informed decisions and grow their business. And I'm happy to say that this year's Inclusive Fintech 50 winners will have access to practical business skills to customize and help their customers build skills and grow. We're also expanding our Practical Money Skills platform to help individuals and communities access the tools and resources they need to develop their money management skills. We believe that greater financial knowledge really empower people to better manage their money and improve their quality of life. Visa is a natural partner for fintechs in this drive for digital equity and inclusion. Fintechs are developing consumer-friendly, inclusive solutions leveraging technology to tackle problems and appeal to new types of customers and consumers in an effective manner. We see fintechs as a key driver of inclusion, helping to close gaps in social and economic equity. We work with fintechs that touch virtually every part of the payments ecosystem, from challenger banks and digital wallets to earned wage access providers and crypto wallets. For example, Self, which was a 2019 winner of Inclusive Fintech 50, has helped over 2 million mostly low-income people improve credit scores, access over 200 million in digital purchasing power, and build emergency savings via an innovative secured credit card with the Visa logo. Also, Visa Fintech Fast Track works with hundreds of select early-stage fintechs each year, providing them incentives, faster onboarding, and dedicated support. And I'm really happy to announce that this year's Inclusive Fintech 50 winners can pre-qualify for Fast Track. We're so grateful for the opportunity to support Inclusive Fintech 50 for a third year with the Center for Financial Inclusion at Axion, MetLife Foundation, Comic Relief, and IFC. And it's also heartening to see such a stellar cohort of women-led fintechs this year. They constitute 36% of the winners, which is much higher than the rate of female founders and CEOs in the global field of fintechs. And while this is great, We still need to do so much more to close gender inequities. The average funding received per year for fintechs led by men is 3 times higher compared to women led ones. So while there is so much more work to do, we have done so much and we've come a long way. And I want to really congratulate all of this year's winners and to recognize the impact of their businesses. We are incredibly excited by the many innovative offerings. They're doing critical work, helping make the global digital economy more inclusive and equitable. So thank you so much. Back to you, Bushley.
Thank you so much, Beth, and thank you for all of the amazing work that Visa is doing on digital equity. And I just love the examples you shared on how you're tackling both supply and demand side issues. So thank you so much for that. So next up, we're going to get into our panel discussion. And before we do that, I wanted to just share a couple of introductory remarks to this panel, inspired in part by what we saw coming through from the Inclusive Fintech 50 finalists. So we all know that, a global crisis like the COVID-19 pandemic can really cause rapid changes in customer needs and product adoption. And I think that what we've seen over this pandemic is that your low-income households are particularly vulnerable to economic shocks because they often lack stable income, access to savings, credit, or insurance. And small businesses are also vulnerable to supply and demand issues. Now, the Center for Financial Inclusion conducted a survey examining the impact of COVID-19 on MSMEs in Colombia, India, Indonesia, and Nigeria. And they found that more than 1 year after the pandemic began, a significant share of businesses across all 4 markets continue to report reduction in profit levels, and that small business owners were still laying off employees or cutting employee hours in order to reduce expenses because of financial pressures increasing. So we can see that this pandemic has had a huge ripple effect on the lives of many. In looking at what has been happening over with the COVID-19 pandemic, what we've also seen is that we've seen the central role that financial services plays as a stabilizing force for the communities who are hardest hit by this pandemic. And, as Beth also said, we can see that fintechs can play a really crucial role in helping consumers build their resilience. And the IF50 data has shown us that these fintechs are taking a really holistic perspective in addressing the key pain points and really building inclusivity. And you'll hear some of this from the panelists that we have today, and we saw some of this last year as well. Early stage fintechs are innovating rapidly to solve these customer pain points, but that, there is also a tension, right? Because they are agile, but also fragile. And we'll delve into a little bit of how the fintechs have responded over the pandemic when we get into the panel discussion. But all in all, I think that it's incredibly encouraging to see how the winners this year have been using technology and data to continue to acquire and serve customers through a really difficult period. Also really interesting is how a lot of the fintechs have also been working with community organizations, as well as digital finance agent networks and other community role models to educate customers about their products and help them recover. So I think we'll stop there and actually just get into the panel discussion, because we have some incredible founders here who have a lot of really interesting things to share. So my first question, which I'd like to ask all of you, is really around your observations around customer pain points and financial resilience over the course of this pandemic. And maybe, Michael, maybe we'll start with Tugende. So, what have you observed? Because the micro entrepreneurs you serve, you're providing asset financing. And I would assume that you were quite hard hit with the hard lockdowns in Uganda, which would have limited your customers' income generating potential. What did you see happening to financial resilience? And also, what did you do?
Sure. Thank you so much. Maybe I can just quickly explain a little bit more about Tugende. So Tugende means let's go, and we are a technology-enabled asset finance business serving small businesses in East Africa and growing. So we help self-employed entrepreneurs own income-generating assets, which increases their resilience and puts them in control of their own business, going from renting to owning or old equipment to new equipment. But we also use that relationship to build a digital credit profile that allows clients to benefit from the responsibility they already have and that they're now proving digitally to unlock near-term upgrade opportunities with Tugende and long-term opportunities both within Tugende and with our partners in a long-term ecosystem. We started by working with motorcycle taxi drivers here in Uganda, and those are still our core clients. So they were hit particularly hard in Uganda, where there was 4.5 months of lockdown in 2020, in which motorcycle taxis, which are one of the biggest modes of transportation, were not allowed to operate at all nationwide. And Tugende is a nationwide business with 23 branches covering most of Uganda. So this was not just an urban or capital city issue. So in the past, we thought that this level of geographical diversification and this level of sort of daily income generation that our clients had provided a huge degree of diversification and resilience, but we weren't prepared for everything to come to a halt. So we initially looked at supporting our customers. Our initial view was that we are building a long-term partnership, and that really goes to our values and DNA. We don't want to help somebody go from renting to owning a motorcycle that they use as a motorcycle taxi, and then we never see them again. We spend a lot of time getting to know our clients as part of the onboarding process, and then building these credit profiles from thousands of digital data points that actually derive from their economic performance and their real underlying business, not just metadata. So our initial reaction was to prepare for remote working. We already do a lot of that with a staff spread out all over several countries and across the country, and then also to make sure we kept contact with our clients. So overnight, all of our staff became client account managers and had a portfolio to reach out to say, listen, as Tugende, we are here. For now, don't worry about paying us, worry about survival, and we'll figure it out together. So this was very powerful, especially at a time of great uncertainty and with a sudden stop of cash flows. Because remember, many of our customers were earning money on a daily basis and using that cash, not just to service their asset finance with Tugende, but to pay their other bills, to buy food. And so if you're used to earning cash daily, you don't necessarily think a lot about having an emergency reserve, to provide food for your family. So we saw really dramatic effects. Clients were selling furniture, really just trying to do anything they could to survive. So after kind of telling our clients that Tugende is going to be with you for the long term, because that's our mission, that's our view, we actually looked at what the biggest challenges were and ended up giving an unconditional cash grant inspired by Give Directly, but we did it ourselves to all, at the time, 23,000 active clients. So it was only about $6 per person, but at a time when people were struggling to figure out just how to feed their family for that day, it made a big difference, and I think really drove home to our clients that we are here to build something long-term. We also worked on helping advocate to the government for different ways to support our clients and also to reopen the economy gradually. There were some frustrating moments where motorcycles were not allowed to operate, even though minibus taxis, which are a closed metal box with 7 people in it, were reopened. And so the health elements didn't really make sense to us, but eventually we were able to support that effort. So when all of that was over, we then had to sit down and say, okay, what are we going to do about this? And we were fortunate to have, very supportive and very mission-oriented investors to back us up when we said, what, we're going to have to give an enormous grace period to everybody because this is a once-in-a-lifetime crisis. So we worked with all of our clients to help them get back on track and restructure their accounts so that they didn't feel hopelessly behind. So let me just pause there. I can also talk about, what we did as a business after that, but I think it's important to just really understand that our first point was to tell our clients that we understand what is happening and we understand that you have no control over it and we don't have control over it either. But we're going to brainstorm together and use the levers that we do have to try and make sure we are all thriving, not just in a year, but 20 years from now.
That's really beautiful, Michael. I love, I think there's a lot that we can all learn from your response, right? I loved your initial starting point just around it's about partnering and it's for the long term. That really, really stuck with me. The communication and just staying, in touch with your customers, the empathy, with the cash grants and then the grace period, also really, really brilliant. I would like to just have a follow-up question there on, so that was helping them deal with the initial shock. What did you do afterwards in order to help them to rebound? If you could maybe answer that, then we can move on to the next panelist.
Sure. So again, the most important thing that we did from the beginning was not lose contact. Even just reaching out to say, hey, we're not calling to put pressure on you in the middle of a once in a lifetime pandemic. Some of our competitors were actually repossessing assets in the middle of the lockdown, and we were reaching out to say, actually, we're in this together. So keeping that connection allowed customers, to start performing again quickly. And I should mention that we also employ almost 800 full-time staff. So working with them was a big part of this as well. And we did not do any layoffs, which we're very proud of. And most of our staff even are now due for promotions. So with that in mind, we were able to help clients come back gradually, and we reached, our pre-COVID performance within a couple of months. And so a big part of that was, again, just telling clients, look, we want you to reach ownership. This is not about us as a recovery of cash. This is about once you own this income generating asset, you don't have to pay anybody. And you are an equity holder, right? You control your business more than you did before. And so we are following up with you to help you reach that milestone so that you can keep building from there. So we did digitize even more quickly. We were able to do an opt-in for restructuring entirely through USSD. We accelerated the pace of other digital initiatives we did. We piloted some top-up emergency loans for our top-performing clients using the credit scoring. And we basically continue to diversify. Our most successful new product was boat engines for fishermen on Lake Victoria, who it turns out were not affected by lockdown because they just kept fishing and people needed to still buy fish. So we've continued to try and diversify our entry points into the Tugende ecosystem, but also to make sure we're really deepening relationships with our successful clients. The more we can support people through the hardest times, the more we hope we can continue to partner with them as they go from informal sector self-employed entrepreneurs to some of the business leaders for the next 20 years.
Wow, that's absolutely beautiful. I love how you actually, use that as an opportunity to innovate your product, building these payment plans and emergency loans, which I'm sure actually will, be a product that's in demand post-pandemic as well. Halima, moving on to you, I'd love to hear what you saw in your customer base over the pandemic and how you helped your customers to rebound. I'm particularly interested in what Oran did because you are designing specifically for women, and we have seen from other data that women were the hardest hit in the pandemic. So really keen to have you walk us through your experience and how you responded.
Absolutely. Thank you so much. Just to give you a little bit of a context of what Oran does. Oran is a digital savings platform. And we take the product, which is called Roscas, which is prevalent in Pakistan, 41% of the population uses it, and digitize it. And the product functions as a both credit tool and a savings tool. So very similarly to Michael, the first response from our perspective was reach out to the entire community of Oran savers and Oran borrowers and tell them that we are in this with you. And that response and that positioning actually allowed women who had a little bit more ability to pay come forward and help the community. So people who could pay extra that month to help their peer savers were coming forward and putting that money forward and saying that, hey, we have that ability and we're able to put extra money this month so that somebody else can benefit. These are people that don't know each other at all. So it's very fascinating to see how the community came together and started helping each other out. Again, it was very similar kind of tactics where it was constant communication, allowing people those grace periods and restructuring their tenures and saying that if you cannot pay, that's completely fine. Contact us, communicate with us, and we'll help you figure out what that tenure and what that repayment plan should look like for you. The other very interesting thing that worked for us was just outside of the ambit of what Uran does from the core business perspective was, hey, we can help you figure out your finances. We can help you budget better a little bit. Women were losing jobs and women were running out of their businesses as well. Our positioning, our constant communication, and that community feeling allowed her to be able to be slightly more comfortable. What we started in terms of responding to the requirements of the customer, what we saw was an increase in savings behavior. What that means is that these women started asking for shorter term roscas just so that they can build an emergency fund for themselves. So very quickly we said, okay, our regular tenure is 10 months. Women coming forward and saying, I'm looking for anything between 4 to 6 months. So we found that sweet medium with 5 months tenures and allowed these women to start getting access to quicker emergency fund, but just putting a small amount aside month on month on month. The other very interesting thing from a community perspective, and this was a community response that we saw, that women with small businesses who were having issues in keeping themselves afloat from a working capital perspective. And at this point in Pakistan, at least, there was a donation fatigue that was setting in. This is your June, prime June post lockdown, but there was a fatigue within donations that were setting in, and there was not a lot of access to capital that was available from a working capital perspective, especially for women. So what we did was people who were interested in helping, who had a little bit more liquidity, connect them to business owners and allow these business owners to raise capital on shorter terms so that they don't run out of businesses. And we also allowed them to promote their businesses in the community that we had, which was a really good means to get their business going, but also made sure that they're not letting go of their employees that they have. They're not shutting down their businesses because they have that extra cash for a few more months to be able to keep their businesses alive.
Yeah, that's it's so amazing what you guys have been able to do there, Halima. I think, some of the things that really stood out for me was kind of this theme of empowerment, right? Where, the women were empowered to participate in this kind of social finance community and help others along, but also that you were providing these tools to help them to respond to the pandemic at the same time, which I think is really incredible, and just how you've built this new set of choices for them. Now, one of the things that I'm also really interested in is, what do you think was the role of your business being a women-led startup in your ability to connect with this consumer base? Because we have found in general in the IF50 data that, when you have more diversity in the management team, particularly women, you have more female customers. I'd love to hear, with the lens of the pandemic, how you feel the profile of your team contributed to the response.
Absolutely. So we are women-led as well. So myself and my co-founder are women. And I think that relatability for women to come to us and talk about, it's not always financial problems, right? We also saw other kinds of problems within the households also increasing. So providing them with the space that they were able to come and share their problems with us, and giving them that extra 5 minutes or 10 minutes of phone time, listening to them and being able to just hear them out of what's going on, really helped them build that trust within the, not just with us, but also build that trust within the community. Because then eventually they went back to the community and shared their experiences and their stories with the platform and where they belong. Because one of the things that we realized was, when it comes to when it comes to finances, at least in Pakistan, there's no safe space where women can come together and talk about it, right? And those financial problems are always linked to some other household issues as well. These women might not be chief wage earners. They might be getting some kind of income from their male counterparts. So how do you provide them with a platform where they're able to have that conversation, and we are the face of it? So not just myself, but also my team, we created this community of women only and gave them that safe space to come and talk about their problems. And that really helped them drive. And from a distribution perspective of the product, even today, it really helps because they feel that they belong somewhere. They're able to relate to the person running those financial products as well.
So one of the things, Halima, that I'm quite curious about, and I'm sure many of the audience are as well, is you've had remarkable traction. How have you been able to get this level of engagement, especially, in a market where digital literacy levels and income levels are so low? I've just been amazed by, because you've literally taken something which kind of exists in the analog world, and you've been able to get some real traction in a digital environment. What do you accredit that to? And maybe you could share some of the interventions that you have employed to get this kind of traction.
Absolutely. So from our perspective, the distribution has always been, where are these women found? What do they do? What is their life looking like? And it's really building with them rather than around them, right? And what we very quickly in our journey started realizing, that there is a sense of belonging that women want, especially when it comes to financial products, because there's no trust that exists. And for us to then go into communities, whether those were online communities or offline communities, and partnering with an influencer there who would not talk necessarily about, hey, this is a great product, you should take it up, but it was about sharing those stories. And women relate more to stories than just directly selling. So the distribution strategy has always been, how do we find those communities where these women belong? And what is it about those communities that relate to them? And how can we position ourselves and allow them access to come into the platform? The other thing that what we realized was, financial literacy, along with market access, gives them that slight more comfort in taking the financial product, because they're aware of what they're getting themselves into. And using a product that was so culturally, religiously, and socially acceptable, digitizing that first, and creating that value for the woman first, before going on to say that, hey, now you are graduating from slightly unsophisticated financial product to a more sophisticated financial product. So building that trajectory with her allowed us to have the kind of traction that we've had in a country like Pakistan.
That's really stunning. So that co-creation, belonging, but also just making it really, really clear what you're getting into. Brilliant. Thank you so much. Sharian, let's move on to you. Keen to hear your experiences. Now, you're operating in a space that has traditionally been quite difficult. And I remember last year we heard from a lot of the inclusive fintechs that people were starting to ask for insurance across, all income levels. It was still pretty nascent. And I'm keen to hear what you've been seeing through this pandemic, because no doubt there have been some changes in perception around insurance. So please share with us what your experience has been and how you have responded at Senang.
Okay, right. Good morning, good afternoon, and good evening, everyone, at whichever time zones you are. Thank you for the time today. Really appreciate it. And to my fellow participants, very happy to hear the achievements that you guys have done. Very, very excited to be working with you closely. First of all, thank you, Bushley, for this introduction. I'm not sure how it works in other regions, but in Southeast Asia, I'll be very honest with you, no one wakes up in the morning thinking about insurance. They don't wake up in the morning, hey, I need to get a life insurance, I need to get a car insurance. It's just the time when I'm going to die, I need a life insurance to cover my family. That is how it works in Southeast Asia. So that was the main crux of my idea. How do I get people to purchase insurance? One. Two, how do I get the underserved, the low income, the middle age, the earned wage, daily wage workers to purchase relevant insurance for themselves? Then I realized, initially when we started off, we did it off in a form of a mobile application. We created a mobile app, asked them to create an app, log into the app, and purchase the insurance. Our take-up rate was 0 after 6 months. Then we realized, as going back to the first thing, nobody cares about insurance. So we realized the only way to make the underserved, the low, daily age worker, or what we call in Malaysia the B40, the low income workers, is to hit them where they are making their source of income. For example, an insurance we created was cleaning insurance, where we targeted freelance cleaning workers, whereby cleaning workers who wants to repair or go to a house to clean a house, they'll go to the app and accept the job. When they accept a job, they have an option. Hey, do you want to add cleaning insurance to cover the damages that you may cause from cleaning, and also to cover your health insurance at that point of time? And it's as low as only 25 cents USD for that particular transactions. That is where we created bite-sized micro on-demand insurances, whereby the insurance start and stop in line with your workforce. From there, we moved on to various types of insurance policy. And in terms of how we saw the demand, yes, we saw the demand for insurance product increase during the pandemic because everyone was scared of their health, their life and their livelihood. However, in Malaysia especially, though the demand was there was not very much a big push factor. And I mean a push factor means, yeah, they liked it, they want to get it, but either they don't buy it because they don't have the money, or they felt the money was better well spent buying a new meal for their family, a new shoe for their family. So even though the demand was high, but the take-up rate was low, that's when we decided, hey, a lot of middle earned wage workers or freelancers, they use motorcycles to go to their workforce. And every motorcycle, they need to fill out petrol. Without petrol, you cannot go anywhere. So we team up with a petrol station company. So whenever they fill up their petrol, it comes up to like 10 USD per full tank of petrol for motorcycle. They have an option to convert the points that they receive to buy a life insurance. That's where we saw a very, very high take-up rate. Within the first month, we did what we call a pilot case study. We did close to 1,000 policies we sold within the first month without any blast at all. We just put a pop-up notification, hey, when you fill up your petrol, convert the points to get a free life insurance. That's where we saw a huge take-up rate. And that's where we realized, as in the case of the underserved, the low-income workers, they will actually love to purchase an insurance. But in their head is that, why should I fork out 10 USD at this point in time when I can use it for something else? If we give them an opportunity to say, hey, you can pay your 10 USD with your points that you use from your petrol, So this is how we manage to, what I would say, find a way in the market and touch wood, within 3 years to be doing close to 100,000 transactions, and over 25% are first-time insurance purchases. Yep.
That's an incredible story, because you're absolutely right. It is very difficult to, the only time we realize we need insurance is usually when it's too late. And one of the things that really stuck out with all of the examples that you shared was kind of this theme around relevance and timing, right? That you made sure that, you spoke about the most relevant aspects of the cover at exactly the right time. And then I think just the work that you've done around how people can pay for that is very cognizant of the fact that this might not be at the top of the hierarchy for purchasing. So how do we reduce that friction, which I think is really, really, really important. Could you talk to us a bit? It seems from the story that you shared that the key inflection point was moving from kind of B2C to B2B. Can you talk us through some of your thinking there and how you think that impacted your ability to serve customers over the pandemic?
Okay, thank you, Bushley. So, of course, the initial concept was B2C, you go to online and all the stuff. But why we went to B2B is we realized in Malaysia, a lot of corporates, a lot of cooperatives, a lot of associations, they have their own memberships, their own members per se. So by partnering, for example, with a cooperative, I can get their 25,000 members at one go rather than spending huge amounts of money on online advertisements. And by curating a specific policy to that, I can get all their members to get insured. For example, we work with a cooperative called Tenaga Nasional, which is the Malaysian National Technology Corporation, and all their 25,000 staffs. We created an insurance policy where they pay for their motor insurance, and when they pay for their car insurance, they can use their salary deductions from it. And when they get their salary deducted from it, the percentage of their salary deducted is equivalent to the health insurance amount. For example, they get deducted for 5 or 200 USD for their salaries. The insurance premium, the insurance coverage for their health is also 200 USD for hospitalization. So we curated specific bite-sized policies to the associations. And because, to be frank, our policies are very reasonable and our margins are also low, this also helped us in the long run in terms of being sustainable. Because we partner up with this B2B, we didn't have to spend like tons of dollars on advertisement because it was all passive advertisement, So we saved so much money on passive advertisement and we got so much of sales just by utilizing this B2B to C method.
Yeah, incredibly important because obviously lots of sensitivity around the unit economics when you are serving low income consumers. So I think a really smart move there. So moving on to my next question, which I'll pose to all of the panelists. And this is kind of triggered by something Michael said, where you spoke about, you pivoted and you started serving fishermen, a completely new segment. I'm really keen to hear from all of you. What else have you seen over the past year or two? Either in terms of your existing customer base changing, and you finding yourselves, operating in a completely different segment, or finding new segment opportunities, over the course of the past 2 years that were not part of your initial target segments. So Halima, maybe I'll start with you on that. Any shifts that you've seen in the customer segment that you're targeting?
Yeah, we definitely saw a lot of younger students coming in, especially because of the pandemic, they all started earning to contribute to the household. So a lot of freelance work started taking up. But what we started seeing was these students coming in and started being very early on in their journeys, being financially responsible and thinking about their savings and thinking about their future. So our demographic, which was your 24 to 38, started becoming your 18 to 24 as well, as these younger lot started going into universities and finding an alternative income to support them, not only their education, but also contribute to the household. So we definitely see quite a lot of younger lot coming in.
Really, really interesting. Sharian, any shifts on your side?
Our shift is a bit different because we were connected to various industries, means petrol stations, cleaning, gig workers, and all that stuff. What we realized is that a cleaner who picks up a job in a cleaning app in the morning will then pick up a job in a go-getter app to deliver items. So we're beginning to see that a lot of these freelancers, which is true, they have 2 to 3 jobs. And now we are coincidentally, because we're integrated to so many apps in Malaysia, we are not covering them for each and every job already. So this is the shift we begin to see, especially during the pandemic last year, where Malaysia had a total lockdown. One particular individual, which was a very young 21-year-old boy, which we interviewed, who was an orphan, had 4 jobs. Morning, he was a cleaner. Afternoon, he delivered items. Evening, he was delivering your food. Nighttime, he was doing graphic design. And for coincidence, we were...
That's amazing. So if I'm understanding this correctly, what was happening, because you were operating across all of these platforms, is you started to have kind of the single view of these customers, and you could see them more holistically, I suppose.
Yes, correct. Exactly. So that's why we begin to realize, hey, and if you ask him to purchase a one year policy worth 100 USD, he'll say, no, I don't want to, because your 1 year policy does not cover my 4 jobs. I want it to be just on demand, different job, different thing. So yes, so exactly what you said, Wishley.
Wow, that's really, really fantastic. So Michael, you actually got us started on this track with your comment about the fishermen. So could you tell us a little bit more about that as a new segment, and also have other segments similar to this opened up for you, and how have you adapted your model to address those?
Sure. So I think our target clientele have not changed. Tugende's business model is very simple. We want to partner with informal sector entrepreneurs who already have a business. We don't train them. They already have to be generating cash flow for more than 6 months. And so they all have a drive to grow bigger and better. And we're just there to partner and enable that. So one of the most important things we realized was that our clients' underlying businesses were not bankrupt. Kind of like what Halima said, we just need to get through this together. Their underlying businesses were still sound. They weren't mismanaged. They were just dealing with a global liquidity shock. So a lot of our focus was to make sure that those clients can survive in their businesses long enough to rebound, and they did. So that was, I think, a very big part for us. We already had strategically started diversifying into other types of asset finance products and into other geographies. And in fact, I wish we'd started even earlier, because our second market, Kenya, did not have as severe of lockdowns or curfews, and the clients there were able to recover much faster. So in terms of thinking about how we diversify for these types of macro risk, we have accelerated quite a bit. But the other thing we've really done on the customer side is to think about deepening. Whereas we were onboarding a lot of new clients in the years leading up to the COVID pandemic, what we've really shifted to is thinking about how do we deepen even more? How do we invest more in the relationship to make sure it's long-term? How do we help our successful clients become nodes or sort of super guarantors to onboard other people into our ecosystem? So one of the most inspiring stories we have is that the wife of a repeat client was able to come and get financing for her small business through us, which is actually wholesale water. She has several enormous, her name is Florence Nakalema, and she has enormous water tanks that she's financed through Tugende that she fills up when the national grid of water is working, and is able to then sell to her neighbors when the grid is off. And she was able to come to us because her husband had a good experience. We were able to take risk on her because of the digital profile that he had earned, which made us more willing to onboard a client in an industry we didn't understand, for an asset we didn't understand. And she's performing extremely well. So as we look at the opportunities here, we see that it might be harder to onboard as many green, fresh clients as the pandemic effects linger, but there are so many opportunities to double down on the clients who are performing and are striving, and use them to open up new opportunities, in their own households and in their own communities.
Thank you, Michael. That's really fascinating, and I see this coming through with a number of the responses, kind of the social aspect of finance, and needing to recognize these connections between people, and of course product depth, right? Which is really interesting. I see that we've got lots of questions coming in here. I have been hogging the panelists. So the first question we have here, I guess, is around the role of human touch when dealing with digital. How are you all addressing digital capabilities challenges to increase or improve usage of your various segments? And the person who's asking this question says that they find that they have to support financial and digital technologies when they put them into the market, and that is not always very cost effective. So open question to the panelists. What are you doing to support these technologies? Halima, I will start with you again because we kind of touched on this a little bit, I think, earlier on because of just low digital literacy. So maybe if you could share a little bit around how you're managing the cost aspect of that.
So again, I think it's around the distribution channels that you use. From our perspective, using the distribution channel, and I think there are two parts to it, right? Like there's distribution channels and empowering the women and the influencers within those communities that we take on and or partner with, giving them enough knowledge to then be able to impart that knowledge to the people around her who would be interested. So working as a pseudo agent network of sorts, where these women are really the champions of the product that we're building. The second is understanding what these women really understand and building with them, right? Like, so for example, credit score, which is part of what, or financial identity is what we do as part of the journey of women as they do their repayment behavior within Roscas. But putting out credit scores or keep giving that information around credit scores is not something that they can really understand. But what they do understand is the star mechanism, ratings. So we build it around them and say that, hey, if you're a great pair, you get a gold star. If you're not a good pair, you get like a red star. And they start getting super competitive how to get that gold star as well. So it's about learning with them and finding those set of power users who help you build with them for scale. And that's really what we've been doing.
Brilliant. So the super users help amplify, and then you've created gamification to keep them engaged and learning through that process. I love that. We have a really interesting question here, Sharian. This is for you. And it's really about, the hustle economy and hustle culture. And the question is, how is your company thinking about, issues of worker safety, the quality of work, and ensuring that people don't get burnt out, especially as they're juggling multiple jobs, and that, I suppose, can also drive some of the safety concerns. So we'll start with you, but of course, Michael and Halima, if you have any build on this question, please go ahead. Sharian?
Okay, all right. Thank you for the question. So the thing is, with our method of doing this, we do API integration. So if there's a cleaning app, we integrate to them. We don't actually per se control and how they accept a job, whether the job has safety and all that stuff. What we do is we ensure the job. But that is something as part of our post roadmap moving forward, actually. What we want to do is how do we increase the stickiness of our users? I mean, how do I get someone, the guy who purchases a cleaning insurance every day, to continue to stick to buy a cleaning insurance for the rest of his life rather than go to my competitors? That's a big stickiness point. That's where what we are doing is we're actually coming up with modules and say, hey, when you buy a cleaning insurance from us, we actually want to give you tools to digitalize or make sure you have a worker safety around that. That is things that we are doing from our side to ensure we build, one, resilience of the gig workers, and two, to ensure the stickiness to them also increases. Yep.
So you're building tools to help the platform owners create more safer working environment as well.
We're building tools to help the gig workers who are insured with us to have a more safer worker environment, because
to keep their awareness.
Yeah.
Okay. Yes. Got it. Great. Michael, anything to add? I know that you're also working with motorcyclists, and that is also quite a difficult job.
Sure. I mean, I can respond really quickly to both questions. I think that from the safety perspective, this is not a nice to have, we care about social impact add-on. If our clients are not healthy and working and thriving, then our ability to work with them for the next 20 years is completely compromised, let alone their ability to pay today. So we've been on a long journey, even just to figure out how to get better quality safety equipment, and then it's bundled in. So we package in life, medical insurance as a mandatory part of the package, and recently started offering our clients the ability to enhance that medical cover for their whole household. But even from the beginning, we training. not to teach you how to ride a motorcycle, but to think about what are the long-term implications of driving crazily today. And I think that then ties back to this digital onboarding question, which is, does fintech mean that you have to encounter customers digitally or gain them digitally? We think it doesn't. And I think the GSMA is also doing some interesting work on digital inclusion. There's less than 16% smartphone penetration in Uganda. And companies like Jumo have done really well with USSD. But at the end of the day, we have to go out into the dust and find our clients where they are today. And we see ourselves as a partner to help them grow digitally and financially and get more comfortable with those tools over time. So we definitely don't expect to go to all digital client interactions tomorrow, but we hope that clients will become comfortable with us as a partner and with digital tools along the same sort of work and history together.
Beautiful. I am going to hand over to Krishna now. Thank you so much to my panelists. I think that everything that you've shared has been so inspiring. It's great to see how you are driving innovation in this area of uncertainty, and just using tools like partnership, social networks, to put products in the hands of customers. And you're really finding the customers where they are. So incredible work. Thank you so much. Krishna, I'll hand over to you now for closing remarks.
Wonderful. Sorry. Thank you, Beth, Bushley, Halima, Sharia, and Michael for this truly refreshing and inspiring discussion. We will wrap this up in 4 minutes, just a heads up. And I wanted to leave you with a few thoughts as I was reading up about their work and listening to these conversations. I chose the word refreshing deliberately because if you look at the kind of, just a bit of a backstory, if you look at the kind of problems we were solving for from a low-income individual's perspective around 3 to 4 years ago, they were mostly around, opening bank accounts, doing digital payments, or every second startup I would meet had a secret, unique credit scoring algorithm that was going to transform lending. And please don't get me wrong, these are essential and important building blocks and problems to solve for. But to be honest, there was a bit of a fatigue within our team as to when are we going to solve for other problems that really matter and are critical to improving financial lives or health of low-income communities. And I felt like we were oversolving for some problems and undersolving for some other important problems. Problems like asset creation and ownership. Problems like helping people build a habit of savings, which is the biggest indicator of financial health. Problems like protecting people's ability to protect themselves and their families against shocks and unfortunate events. And this is exactly what the 3 absolutely amazing startups that we met today are solving for with their innovative solutions. And that is what was truly refreshing. It's amazing how Michael, you not only offering asset building solutions, but taking even a step or a few steps further by offering, your customers with safe riding trainings, insurance, as well as even cash grants at such important, crucial timings. How Serang is building unconventional partnerships to provide innovative and inclusive insurance products to gig workers and others who don't have access. And Sharia, the guy with 4 jobs, oh my God, I do want to meet that gentleman when I'm in KL next, so I'll call you up. And then Halima highlighted the need to create, safe space for women and importance of gender intelligent approaches to include women in the financial system. To me, this is a clear and strong and positive signal that not only do we understand the problems around financial health of low-income people, but we also have an amazing pool of social entrepreneurs who are putting all of their resources and capabilities at stake to help solve these complex, wicked problems, and which is what is inspiring to me. I do highlight, before I conclude, I do have to highlight one thing that stood out in a bit of a glaringly negative light, right? The issue around funding, or rather lack of it, for female founders. I was really honestly shocked. A company with, Maha shared this with me yesterday, that company with solely female founders raised only 2.2% of all venture funding in US through the beginning of this year. A lower share than any of the previous 5 calendar years. So I really hope that we all take this challenge up in whatever ways we can and focus our resources on reversing this trend. But as Beth mentioned, we're already trying to do in our small ways to bring that issue to light. And it's heartening to see that women founders represent around 37% of startups in this cohort. So I'll end this and we will finally, we are so happy to be a small part of this wonderful and ambitious journey of this entrepreneur. So I have to begin or end with both congratulating and thanking all of our panelists and actually finalists and all of the inclusive 50 finalists and winners for their courage and ambition in standing up and solving for the things that matter. And secondly, to the Center for Financial Inclusion team at Axion, who has been tirelessly working for months with hundreds and hundreds of people from all over the world, including donors and judges, investors, incubators, accelerators, to make sure that we don't leave any stone unturned in finding the best solutions. And finally, to all of you who managed to join and stay through the discussion. Thank you. Have a good day, evening, or night from people from my side of the world. Signing off.